The US stock market is undergoing another massive decline. What happened this time? Same as the last time. What happened last time? Nothing really. Okay, well, you came here for the truth, so let me unveil that for you. Today we're going to look at what happened in the stock market. Let's begin. You can see the bond and stock returns in terms of percentage and what has happened over the past few trading sessions, clearly showing a downward trend. Over the past year, the stocks were barely showing any negative signs, but it seems to me that over the past few trading sessions, there have been some definite negative pressures. Looking at the VIX, you can see what has happened. We are not at the record amount that we experienced in the past few years, definitely not even in the past few days, but it has come up quite a bit yet again. So there was some pressure easing off just recently, but it didn't take long and didn't take much for that to be pushed up yet again. You can see here all the indexes into correction mode. You will notice here that they have all broken through their territory. It's pretty small font here, but essentially all broken through these definite important lines when you see these in technical analysis. All I wanted to note was that they have all done this, okay? They all move together, even though one may have mining and, let's say, financials, another market may be tech stocks. It doesn't matter. They all move together. All sectors move together. When things go haywire, everybody sells, everybody runs for the exits, and we have a big problem on our hands. This right here shows you the VIX and what has happened recently in terms of the percentage change. It has gone absolutely ballistic. The VIX was calm as it ever has been, going down to a territory of approximately 8 at one point. And then it didn't take much to send it off into territory that it hasn't seen in a very long time. Volatility has picked up dramatically. The question I brought up in the previous videos about this was why? And it's the threat of interest rates rising. The threat, the fear of interest rates. Why? Because there's too much debt. The national debt, the personal debt, state, city, counties, they're all in debt. And the more interest, the bigger the problem that we will have. And of course, you also have the issue of people are taking out all this debt. Let's say they have a car loan, they have mortgages. All of that is going to rise, and then people will borrow less. And as a result, everything will come down. And they know that. So the market does not want interest rates to rise. The traders, the algorithms, they are ready and willing to sell once they see the pressures of interest. Look at this. Credit investors, what are your biggest concerns? Now, I showed a similar chart to this not that long ago. Rising interest rates was nowhere near this high on the list. I don't remember precisely what it was, but definitely was not this high up on the list. November of 2017, you can see that it was significantly lower, and we have clearly added to that as of January 2018. No matter where you look, you're going to see changes that occur over time, that's for sure. But I'll tell you something. Rising interest rates might be in the back of traders and algorithms' minds, artificial minds in some cases. But we are looking at a time in which the market hoped that this would never happen. They knew that, well, they'll have to increase the interest rates at some point, but hopefully they won't. That's not a good way to be dealing with your problems. Here you can see inflation risks. Clearly, they're more worried now than they were a year ago. Here you can see the outflows that are occurring. Definitely, there is no doubt about this, a sea of red in the US. Outflows are occurring massively, and if I'm not mistaken, these are ETFs specifically. But what you can see here is this. And I found it funny. If we focus on one particular country, and that is Japan, their ETF's positive. There's only one explanation for that, and that is the central bank, the Bank of Japan, buying them all up. Now you can see what has happened. The contagion has spilled over into Asia. I'll show you a few charts based on this. And clearly what we are witnessing here is that despite fundamentals, you could say, oh, there's so many houses being built. There's so many condos. There's so many businesses. Corporations are doing well. Corporate profits are doing well. Doesn't matter. When people sell, everybody rushes to the exits, okay? Look at what has happened. A problem in the US, worried about inflation, worried about interest rates in the US, and the stocks in China going down. Think about that for a moment. When you buy into a particular stock market, you think that you're somehow isolated. This is a globalized world. You can't get away from your neighbor's problems, even if they happen to be on the other side of the world. All right, looking at this next one. Shanghai Composite, you can see they were trying to retrace their steps here over the past, let's say, back since about the beginning of January, started to climb significantly, and it really didn't take much for this to be tipped downward. Look at this, Hang Seng, same issue that we can see since December. It's been rising consistently, in fact, but again, down quite a bit. Japanese stocks are down as well, same trend. And the Dow Jones. This here, they're showing you in two different charts here, but maybe I'll show you this first. This is the dead cat bounce. Now, it's an interesting term. I like it. What you will see here, maybe I'll show you in this chart, might explain it a little better. We had this dip downward, took a few trading sessions, but then it really stepped on the gas in reverse, going downwards. Then I did a video right in here talking about the markets, okay? Okay, the markets are down. At one point, it was down 1,600 points. There had been some recovery somewhat, dropped down 1175 by the end of the day. And then the next day, it rises up. So then we had a bunch of comments right in this region here saying we are now in a recovery phase. No need to worry. Nothing is wrong. However, today we enter an even lower level than we were previously. Of course, if I zoom out on here, we're going to see the chart clearly rising up. You see this corrective phase coming down a bit, and now at the time of the recording of the video, we'll see, does it go further up, does it go further down? I'm not sure. I know that if it gets down to a certain level, then of course the Fed will step in. If the Fed steps in, I believe that the stocks will definitely rise upward. Of course, if they do so, it's a simple matter of fact, we have more inflationary pressures. That's what they want, really. That's ultimately what they're trying to do. They're trying to cause inflation on purpose to erode the amount of debt payments that they will need to eventually give back to the other countries and central banks and everything else. So this here presents themselves with a big problem because they know they're in this conundrum. They know that they can't necessarily pay back their debts. They know that they can't push the stock market up without manipulation, that the central banks are buying shares around the world. And this ultimately presents itself with this issue that, as I said, cannot be restored. How can you fix it? What are they going to do? And the fact is that they have to simply either see it fall or print money. And these are the two options, and there will be no resolution that doesn't end in a bad situation for the average investor. The average investor is going to be scraped for every penny that they have. They're being sucked into the market. Every time there is that dead cat bounce, there's going to be more investors pouring in their money in this region here, and they will unfortunately have to pay the price. Now, as I said, there may be more opportunities. We may see the market simply rise on up from here on out. I don't know what they're going to do. All I know is that I can ask myself, why did the market come down? Why did we have this line right here? Because of the fear of interest rising. What does that mean? That means the market's scared, the algorithms are scared, and the central banks are simply waiting on the sidelines, wondering, should we begin to print? Should we reduce interest rates? What do we do? They look at the fundamentals of the market, they look at it probably for about 10 seconds, and then they come back to their own decisions on when it's time to pull the plug, of course. And looking at the governments, you can see right now, as of the recording of this video, we haven't got to that point yet, but it looks like the government's going to probably be shut down again. No problem. They'll just sign a little law into place. Big deal. Markets will come up yet again. So if we have a shutdown, I think the markets could come down. If the markets see that there will be a resolution to this problem, markets will go up, at least temporarily. I just think that the underlying risks haven't even been addressed at all, ever. So should they be addressed? Should we have a bank failure? Should we have some contagion that spills over from Europe into the US or something else? I know specifically that we will see the markets coming down yet again. That's something that I just wanted to touch on here. Last but not least, the Fear and Greed Index. One of my subscribers brought this to me, wanted to share it with you. You can see that right now it is at what they call extreme fear, and this is CNN Money, highly reliable source, Anyway, they have some fear and greed indicators. If you're interested, you could check that out. If you just type into the search engine CNN fear and greed, you will get this to come up. It's just interesting to see as the days go on. You can actually check this out as it moves through. Something of note. That's all for this video. If you found it informative, please give me a thumbs up. Last but not least, if you found the video informative, I know you will find my books, The Money GPS, and my newer release, Global Economic Collapse, even more informative. The first book is about the 4 asset classes and how to profit from them, and my newer book is about the familiar topics. However, I get into earning income, reducing your monthly expenses, and becoming self-sufficient. So you could check this out at Amazon. The links are in the description below. Take care.